Hello, I'm your host, Effie Pilarino, and I have the great pleasure today to have with us, an old colleague, a good friend, Arun Krishnakumar, who for at least the Fintech and VC circle needs no introduction, but I must say he is, at least say a few things, a partner at Greenshores Capital. He's written a book. We used to write together on Daily Fintech. We started together the podcast Rhetoric with a focus on financial inclusion and blockchain and much more. Welcome, Arun. I hope I didn't miss many of the activities, the main activities that you're involved with.
No, not at all, Effie. Thanks for having me. It's a pleasure to be having this conversation.
I think actually I missed one. I didn't mention your interest in impact, financial inclusion, and sustainability. Yeah. I think that is in your heart, right?
Absolutely. I mean, I still, I mean, even when I'm looking for some stories to talk about on social media, the things that naturally grab my attention are things around some entrepreneur doing some amazing work in agri-tech in, say, Latin America or financial inclusion in Southeast Asia, and ed tech in India, for instance. And of course, the China and how the China West and the India chemistry is working for fintech across the world in some sense. It's interesting times we live in. So I naturally kind of gravitate towards those topic, and so I must be passionate about that, I guess.
Yeah. Today I'm going to pull you away from that because I want to talk about a hot topic in the public markets. I want to talk with you and pick your brain about this hot trend with SPACs. And for those that don't know, SPACs are special purpose acquisition vehicles, I guess. They're actually hot, I believe, only in the US. Let me throw some numbers and statistics in terms of what we are seeing. In the US this year, it seems that we not only have doubled the number of SPACs raising funds, we are over 100 right now, according to SPAC research. We are close to 40 billion, if not more. Most of this activity is tech. And we'll talk about what we see in fintech. But Arun, you are in the venture capital world, and for you, this trend was probably, you were aware of it much earlier than the rest of us. What have you seen, and what is your main explanation for this trend in the US?
A easy, quick way to raise capital, I think. I think that's if you want to keep it simple, it's creating quite a lot of opportunities, but there are challenges around finding the right deals that you can IPO as well. I mean, as I understand, as of recently, there were about 50 billion unallocated SPAC capital that's waiting to pick up a firm that they can take to an IPO. And as we all know, there's a period of time after which you can't do it. You've got to return the money.
Is it always 18 months, or that's the typical term for a
24
SPAC?
months is 24 months is what
Okay.
what I understand. So you've got to be able to return the capital after that. So that is interesting. What is also, I mean, and these are all trends that are largely US focused. I haven't seen much of the activity in rest of the world. What is also interesting is the rolling funds that are starting to come through over the last. I mean, the SPAC trend is still quite hot, but over the course of the last, I think, few weeks, really, we're starting to see a lot of rolling funds coming through, especially in the US again. But it's a little bit ironic, and in your hashtag terms, the irony is that the topic, the concept of rolling fund has been in the UK for several years now.
So explain to us what is the rolling fund and what's the difference with the SPAC?
So SPAC is more of a public market vehicle, right? So, but rolling funds are private markets. They're a proper fund, but it just the structure democratizes the process of raising funds for you don't have to be an institutional fund to really have to really do a rolling fund. And it kind of, it's like if you're a one-man army, and we know a few one-man armies that are actually starting to look at rolling funds. If you're a one-man army with the brand, with the credibility in the space that you're operating in, with a couple of good friends, you can say, hey, give me 100K check across a couple of people, and then I'm going to start now deploying this capital. And then you set up a subscription that keeps topping up on a regular basis, quarterly typically, but you can do that and start building that fund to 7-8 million over a period of time. This is pretty new in US, but what I have seen in the UK market, it's been around for several years, which we call EIS and ACIS funds, early stage funds, where most of these EIS, ACIS funds in the UK, they raise every year, annual fundraising and fund closures. They deploy the monies that they have raised at the start of the year through the year, and start with a new fund the following year. And that is very similar to a rolling fund as well. So it just democratizes the process. It's almost like a bridge for several first-time funds to get to a institutional stage. In terms of going back to the SPAC conversation, one of the things that I find interesting is the kind of loosening up of the regulatory oversight. Like for instance, Chamath went on I think on CNBC or something and spoke about the open door IPO, and of course there the good things about the organization, and there were quite a lot of commentary going on what would happen if I went, or like a day after the IPO, if an investor like that went on CNBC to pump up the stock price. There's a clear conflict of interest there, and at the moment the SEC are not really clamping down on those activities for SPAC. So I think some of those regulatory arbitrages we are seeing with these with SPAC, similarly with rolling funds as well, there are a few regulatory arbitrages that I understand are there. So it's going to be interesting. I think over the next couple of years we're going to see an explosion of these vehicles because there's so much capital out there. Sorry, go ahead.
Exactly. No, I mean, I wanted to say, I wrote an article last week about the fact that 50% of IPOs in the US, and this is before Snowflake IPO, this week, were SPACs actually. Not all of them are active, but the number is stunning. And of course, the biggest one is the one that happened this summer with Bill Ackman that raised $4 billion. Okay, and so we have in July this year this $4 billion fund. I'm interested in seeing whether any fintech will end up in that fund. There's a little bit of talk around that maybe a firm will be a candidate. Who knows? But the issue is that it seems that there are some entrepreneurs that really like this structure. Bill Ackman is one, Chamath is another one. So
Howard Lindzen.
Yeah. But now this week I'm reading Richard Branson is going to raise a SPAC fund, another I think 400 million he's aiming to raise, and it continues. And as you said, it's this regulatory loophole in the US, because in Europe apparently they're very strict about SPACs. and in Asia, there's nothing really going on. There's other wrappers there. What I want to understand is, let's take the different angles from, is this really an alternative exit for founders or the VCs that are invested? Do you see that really as a meaningful alternative exit? Who can benefit from those two groups more?
It definitely simplifies the process of going public, because you're not relying on a lot of people to go for the process. But the problem I have is does it really help in the long run? Because if you think about it, I was listening to Michael Dell's interview with David Rubenstein this morning, and the question was, how are you feeling now that you're completely private? You've been like that for several years, and he's like, I've got quite a lot of peace of mind. I don't have to deal with this quarterly and analyst kind of pressures anymore, the 90-day cycle anymore. I think that is perhaps the biggest challenge for many of these private organizations to go public. I mean, IPOs haven't been as hard. Yeah, we have seen WeWork stumble, but apart from that, if you have a decent viable business model and there is a growth story and a solid team, IPOs are not hard. The moment you get to that kind of growth, IPO is just a natural transition. But the problem is what comes after that. Can you sustain the kind of the public eye on you all the time? Can you look at the reaction to a long-term strategy, that how the markets are going to take the reaction to a longer-term strategy than a short-term kind of approach to shareholder benefit. So those are the challenges that these firms will struggle more, I think. I'm not really seeing SPAC solving a major problem personally, but I think there is quite a lot of Silicon Valley money that's going to pour in there, and the fact is that there's quite a lot of cash out there. SPACs are happening, rolling funds are happening. I'm hearing private equity is actually, there's a lot of leverage opportunities within private equity now coming back because interest rates are like pretty low, with negative interest rate conversations happening across the world. I think that's driving some of these kind of new vehicles to come in, I guess.
Right, and from the investor's point of view, whether it's individual investors or it's institutional investors getting in these deals, we saw what happened this week with the Snowflake IPO that started at 120. That's the deal.
360.
It went to whatever. So in any case, now we are around 250, right?
Yeah.
So and there's no way for me and you to get in, below 250, so to speak, right? So is a SPAC, is it democratizing that access for us? If I buy today, for example, the Pershing Square holdings of Bill Ackman, it's trading around 2022. I mean, there's some warrants there that have been spun off, but can I expect to get a large portion of the upside if they are successful and they do a great, a good deal at a good price? I mean, because obviously
it definitely helps. It definitely helps in that sense, which is you can enter earlier into these IPOs. Previously, we didn't have that luxury. But the flip side to it is, if there is not enough organizations involved in the process of IPOing an organization, is there going to be enough due diligence around the process? And are we going to get the right valuation? I mean, we probably shouldn't talk about valuations at this point in capital. I mean, especially for tech stocks at this stage. But that, are we creating systemic risk is another part of my mind thinking around that. But it definitely helps. Yeah, if you're looking for an early entry into some of these deals, it definitely opens up those doors for you. as a retail investor. So in that sense, it's a quite a clever model,
Right.
and which is perhaps what differentiates it from the existing model where only the big boys of capital markets could chip in early and
Right.
benefit. I think that in that sense it democratizes the whole IPO process in many ways. Yeah. But again, I'm also a little bit uncomfortable because at that stage your organization is not really. I mean, there's a lot of information asymmetry at that time, and you're asking retail investors to get in at that time, and there's not enough regulatory oversight on it yet. Doesn't feel quite right.
But Arun, what I'm hearing from you is that we haven't really solved big problems. The main problem, the core problem to give more access and to democratize is not about having an app where you can swipe and, you know, you're eligible to invest and so on. It's about what you said, the information asymmetry that existed in my years when I started on Wall Street. Of course, it doesn't exist to the same degree, but in a way, it's a fallacy because it does exist. There's tons of information out there. You know, at the end of the day, I don't have the tools and the time to gain clear insights and make calculated decisions that make sense based on the information simply because it's available out there. So can we use the hashtag, and the irony is that nothing has changed pretty much, or not?
Yeah, I mean, from a mindset and the kind of irrational exuberance perspective, yeah, I don't think anything has changed. But I think the SPAC wave will continue. The rolling funds wave will continue, should continue, with a little bit of oversight. It's definitely a really good vehicle. As you mentioned, it uses early entry into these big firms if you wanted to get in earlier. Yeah, but get in after understanding what you're getting into. Some of the big names I've been following on Twitter in Silicon Valley who've been into SPACs themselves reach out for help on Twitter, asking for what does this mean? Is this something that I can get into? And there's quite a lot of very healthy conversation that happens. And if people who've invested billions into some of these organizations or made money investing millions and millions don't understand some of these firms that are being backed by SPACs, what chance is there for a Robinhood retailer to get an understanding of that? So I think that is where I'm seeing a systemic risk, but the market is too small at this stage, right? So it's not so, which is why probably the SEC are not worried about it. Once that starts becoming systemically important, I think then there might be some oversight on who can actually be part of this SPAC thing and who can get in and get out and stuff like that. I think that will be helpful.
And I want to close with a note. I noticed, I think 2 days ago, that Pump in the crypto market is setting up a rolling fund, obviously, to invest in this sector. And definitely there, I was a bit surprised with this structure. I expected that there would be some type of tokenization of a standard fund, but I guess in the US, this is pretty much a regulatory headache, right?
Yeah. So, but it's a good trend. I'm loving the rolling funds trend because it is still in the private market space. The moment it gets to the public market space is when I start feeling uncomfortable. Private markets are fine because you're not going to open it up to everyone. You're going to have those sensible conversations. Hopefully, have those sensible conversations. And irrational exuberance, again, as I said, it's going to be to a limited circle of friends, family, colleagues, and the investors whom you can virtually wine and dine with these days. So it's still even if you're creating a systemic risk, it's going to be within a very close circle. So it's not it's not a major issue. But I think I love the rolling funds concept. It's democratizing the process of getting to an institutional fund for first-time fund managers. It also helps them set that kind of track record over a period of time. You've done it over a period of time, 3, 4, 5 years, shown some exits, and then you can then start looking into an institutional fund. And that's a really good stepping stone. And I think that I completely love that idea.
Great. Thank you so much, Arun, for enlightening us around these trends between private and public markets and the structures that are more popular.
Thanks for having me, Afi.